What's up, y'all? Welcome back, CCI family. Chump Change Investments, most definitely in the building. It's your main man with the game plan. Back at you again. You already know the vibes. Today we're discussing ETFs. For those who don't know, simply means exchange traded funds. Okay. Hopefully you've already chosen a good brokerage that we discussed in the past video. If you have, the next step for you is to build your portfolio. To build a strong portfolio, what you're going to need is a strong base. Just like building a home, you want a strong foundation. To do that, you're most likely going to start with either an index fund or some ETFs behind you. Strong base. Index funds are a little more pricey right now for beginners, so I would guess to get them started with ETFs. There are many ETFs out there, and I mean a multitude of them, from automotive to technology to consumer products and so on and so forth. You name it, they got it. So what I'm going to do is, of course, give you a few examples of different ETFs out there that are more beginner stable to start with, okay? But as always, it's up to you to do your due diligence, do your own homework, find out what suits you best, and take it from there, okay? After that, of course, at the end of this video, I'm going to be dropping a new gem for you. That's what, for you to decide whether to start investing in that, if it's right for you or not. You feel me? Hey, I can't tell you whether to buy, hold, or sell. I can just give you that information you need to rock on. You know what I mean? So sit back, relax, catch that you know what it is. Grab the pen and paper. I'll be right back with you in a moment.
ETFs, or exchange-traded funds, are investment funds that are traded on stock exchanges, much like individual stocks. They are designed to track the performance of a specific index, sector, commodity, or asset. When it comes to ETFs, they usually contain a collection of different investments such as stocks, bonds, or commodities. This allows you to spread your risk across many investments, rather than relying on the performance of a single stock. ETFs can be bought and sold during trading hours, just like regular stocks. This gives you the flexibility to react quickly to market changes. ETFs also disclose their holdings daily, so you always know what assets you own. And most ETFs are passively managed, meaning they aim to mirror the performance of an index rather than actively trying to outperform it. This often results in lower management fees compared to actively managed funds.
All right, there it is. There you have it. That's the hardcore book definition of what an ETF is, okay? Basically, in layman's terms, in our terms, it's a package deal. You feel what I'm saying? So just like those little boxes of chips you can go and buy from Walmart or order them off Amazon that has a whole assortment of different kinds of chips in one box, instead of going and buying one, same kind of deal. It saves you from going and buying a piece of this stock and a piece of that stock and so on and so forth when they're all in the same category. What you want is a little bit of everything, right? So that's what an ETF is basically. And you DCA, which is dollar cost average, into them, and over time, over history, it has not been beaten. Okay? So I'm going to give you a few definitions, well, not definitions, but examples of these ETFs, some that are good for beginners, something to get your feet wet basically, and build that solid foundation. Okay, let's get into that. Coming right back. All right, let's get this party kicking off with iShares US Technology ETF, ticker symbol IYW. Currently sitting at $158.73 per share. We are up 1.33% on the day. Okay, this ETF, full technology ETF, which means it houses the largest technology stocks in the U.S. stock market right now. Just to name a few: Microsoft, Apple, Nvidia, Alphabet, which is Google, Salesforce, Oracle. You name it, they've got it. Okay, these are the top technology stocks, once again, all bundled up in one pretty package for you. Okay, next up, we're going to go IWY, ticker symbol IWY. Not going to get confused with the first. This is the Russell Top 200 Growth ETF, which means it houses up to 200 of the largest growth stocks in the stock market at the time. Currently sitting at $225.97 per share. This one is up almost 1% on the day. Okay. In the Russell Top 200, you will see some similarities to the IYW. You will also see some differences because, again, these are the top growth stocks. Okay. So similarly, you'll see Microsoft, Apple, Nvidia. Differences, you'll see Tesla, Visa, MasterCard, Netflix. Okay, all growth stocks. All right, let's kick off with the next one. XLP. Repeat it to yourself about 3 to 5 times a day. You'll always hear this. Okay, a very solid ETF to start your foundation off with, building your portfolio. Consumer staples, if you don't know, simply means products you are not willing to go without, you are not going to go without, you are purchasing on a regular basis. Currently sitting at $77.40 per share. This one's up almost 0.5% on the day. Okay, let's take a look at what's inside. Here we have Procter & Gamble, Costco, Walmart, Coca-Cola, Colgate, Target, Dollar Tree, Dollar General, Clorox, Tyson, McCormick. Okay? If you ain't seasoning the food, you ain't cooking the food. Point blank. So you have all of these everyday products in one bundle. Okay? For the bargain price of $77.40 per share. You can either decide to buy a few shares off the bat, because at this price, it's pretty much a steal right now. And we'll go into that further in a later basis. However, you can also choose to do what? DCA. That's correct. Dollar cost average into this. All right. Next up, its cousin, XLY. This one is a consumer discretionary. I call it its cousin because it's kind of opposite from staples. A discretionary is a product you will purchase when your pockets feel good. Okay? Maybe you want to add on to your home. That new deck you want to build. Where are you going? Home Depot, Lowe's. Okay? Things like that. Maybe you decided to take that trip with the family y'all been waiting to do for I don't know how long, right? So, Carnival Cruise Lines, Booking.com, so forth and so on, okay? That's discretionary, okay? And we'll take a look at just a couple in here as well. Nike, Starbucks, Chipotle, Hilton Worldwide, Royal Caribbean Cruises. You get the point. Okay, so those are all, again, in one bundle, packaged up pretty for you for the low price of $191.45 per share, up 0.75% on the day. Again, a price that you can easily start DCAing, dollar cost averaging. Yes, I'm going to continue repeating that phrase because you're going to need it. Okay, another solid ETF to start your portfolio with. All right, wait, I'm going to take it back to the classroom now. I'll see y'all in just a moment. All right, so there you have it. Those are just a few of the many ETFs that are out there. The ones that I've chosen, I feel are better suited for beginners in the game. Not to say that there are not millions of professionals that still deal with these same ETFs. However, I chose them because of their strengths, the long-term effects of these ETFs. Not looking for the quick turnaround but that you can get in some of them. Now, with the growth ETFs that we discussed, again, a little more riskier, but not heavily risky. Okay, so you can see profits probably a lot sooner than you will in some of the others that were listed. But the others are more of a great foundation, a solid foundation for you to start your journey on and to get in this game. And most times you're not going to let them go, okay? They are long-term ETF stocks that build over time, all right? I can go on and on with the ETFs forever. It would take a year to make that video, but I just wanted to give you a little background on them and a leeway into what we're getting into next, which is DCA. You heard me repeating it time and time again. In our terms, layman terms again, DCAing just means dollar cost averaging, which is you take the same amount. For instance, say it's $50 a week or $50 a month or what you can afford, okay? You putting it into that same ETF or that same stock on the same time basis, okay? So 50 a day, 50 a week, 50 a month, whatever it is, you keeping that up. However, if the stock dips, and we'll get into that later, you might want to add a little extra in or buy a little more, okay? But over time, whether that stock is up or down and you were still putting in the same amount at the same time, that process hasn't been beaten, okay? So that's a quick synopsis of dollar cost averaging. Get to know that term, do your research, do your homework, do your reading, okay? We're gonna jump into the gem of the night, okay? Which tonight is
SoundHound AI.
SoundHound is a company that develops voice AI platforms and conversational technologies. It offers automatic speech recognition, ASR, natural language understanding, edge and cloud connectivity, transcription, automatic content recognition, and other solutions. The company was founded in 2005 by Kevan Mohajer, Majid Amami, and James Hong. Its featured products include a voice AI developer platform, SoundHound Chat AI, a voice-enabled digital assistant, and a music recognition mobile app SoundHound. I believe this company is really worth taking an interest in because SoundHound presents an intriguing investment opportunity due to its low stock price, strong revenue growth, and innovative AI applications. However, the company's substantial cash burn rate and the need for continuous funding introduce a level of financial risk. Given the potential of voice recognition software and the secular themes fueling AI, it's not unreasonable to think that SoundHound could grow its top line by 50% for the next several years. However, as the competitive landscape intensifies and considering the long-run macroeconomic outlook is unknown, this may not be easily attained.
SoundHound AI. That's your gem for this evening, okay? I'm never going to drop anything but jewels for y'all on these channels, okay? So take heed, take your notes, find out if it's the right company and fit for you. Again, I think you'll be more than happy with it, okay? But that decision is up to you. I'm just giving you the education and the information, okay? You take it a step further, all right? SoundHound AI is a penny stock, but don't sleep on penny stocks. No. Don't sleep on penny stocks. Remember, Apple, Amazon, these were penny stocks. Most big companies at one time or another were a penny stock. And then you hear the stories. I bought 1,000 shares and it was just $2 and now look. You feel me? Oh, you should have bought it when it was... This is that time, okay? Solid company. Do your research, do your homework, do your due diligence, okay? Do it. And you'll see what's up. Okay, I think you'll again be more than happy with it. I am going to show you how to break down a company in a later video. We'll use this one as an example. Okay, I'll show you how to the fundamentals of the company. I'll show you the technicals. All right, but until then, thank y'all, CCI family, once again for joining me today on this journey. And we're going to have many, many more. I'm getting a little more used to it. We're going to do this time and time again. Okay? So again, I want to thank y'all. God bless. And I'll see you on the next one.